Let's get across the market open. Jonathan Takadena joining us from MPC Markets. Jonathan, welcome to Monday. Great to have you on the show. Let's take a look first how we finished on Friday. Bit of weakness there on Wall Street, dragged lower by the chipmakers.
Yeah, it looks like we've had a great run, and it looks like the S&P has broken out, and we've had probably the first round of profit taking that we have seen across the board. You can see that across the indices, even the Russell has broken out to new highs, and usually when the first breakout happens, there's usually a bit of a retracement, and this could be the first signs of that. Now, to see if it continues or if there's more of a retracement, we just have to give it a few more days to see if there's some continuation. But at the moment, I still believe that the momentum is to the upside, and we can talk about some of the positive factors like the passive bid or the AI trade more a bit.
What are those positive factors you're seeing at the moment?
Yeah, so look, if you just open up the newspaper, there's plenty of bad news out there. I mean, so NAB's come out today and talked about more about the struggling customers out there, war in the Middle East, rising bond yields. That means that there's going to be a bid in the interest rates going forward as well. But just in general, the markets look healthy, and the two main factors are the AI trade. So there's still plenty of capex to be spent or planned with these mega data center build-outs, and you can see that in Anthropic. So Anthropic hasn't listed yet, but they actually came out with some revenue numbers for Q2. They came in and said they have record revenue of $11.5 billion. Now, if you zoom out 12 months ago, it's been a 14-fold increase in revenue just on their Claude compute out there. So it just shows you the uptake in AI. And then if you look at some of the broader data, like there's sites like Open Router, and it actually has the history on the spend in tokens. And even a year ago, we're looking at a 40-fold increase. So people love to project charts forward, and they just see a rising curve. We've had bagger increases in utility and use in tokens, and so they've just expanded that out. If you have a look at I don't have the graphic here, but there's an actual graphic going around about Meta's new data center called Hyperion. And they overlaid the data center footprint over Manhattan, and it pretty much just takes up the size of Manhattan. And what you have to realize is that's only one of the hyperscalers mega data centers building out. You got Amazon Web Services, Google, Microsoft, and Elon all building these massive data centers. So yeah, if you can just see with the high use in token usage, they're going to need more compute to deliver that service in the future.
Just vast, those numbers to consider. Jonathan, I guess one way of playing the AI trade here locally has been via those with exposure to copper, other than the data centers themselves. And that's certainly been driving the likes of BHP and Rio high, yet just more recently seen a bit of weakness in those metals prices.
Yeah, there is. I think it's just a quick round of profit taking. So the copper chart, if you compared it to gold and silver, it actually looked a lot more healthier as it broke out to new highs and pretty much consolidated there. It has pulled back a little bit. So I think it's trading roughly about $6.60 a pound. And so you've seen a bit of a profit take in BHP and Rio as well. And then you've got BHP's numbers coming out this week. So it'll be interesting to see what they see out there. Interesting to note within BHP is that it actually has kind of defied gravity because iron ore prices have fallen. And it could be just there's a bit of a pullback in BHP because of the pullback in iron ore. Because, as it's rising, it's a copper company, but if it does fall, they'll go, oh, it's more iron ore. So it's all about the narrative at the time. So I think there is generally there could be a little bit of a pullback, but I see that as an opportunity to buy in. I've talked about these massive data centers planned over the next 12, 24, 36 months by the hyperscalers. They're going to need those resources and the metals to build those out going into the future. And you want to stick with the large producers to take advantage of that.
Jonathan, the retailers, interesting what we're going to hear JBHiFi today, but more broadly, what are you seeing there? I should note also, we did get that retail data out of the States on Friday, which was weaker than expected, combined with some negative sentiment there more generally for consumers.
Yeah, I think because what's happened in the States, we've had that high from the World Cup. Obviously, if you look at some of the stocks like Airbnb, because of that boost in tourism, the share prices have shot out and recorded record numbers. And obviously, that tourism dollars helped boost. But it's interesting to see that it's actually missed expectations and a little bit weaker. I think just in general, as you said, like high energy prices, interest rates aren't going down. The consumers are feeling the pinch out there. But JB Hi-Fi, I flagged this a while ago because I've had a lot of retailers to talk about on the call over the past few months, and I just kept saying, look, everything's fallen in unison, but you can just see some of the leaders like a Wesfarmers or a JB Hi-Fi have bounced early. It's like, okay, so they've all fallen in unison, but the leaders are starting to bounce early. You're better off rotating out of some of the weaker ones and into some of the leaders to try and catch that bounce. And I think JB Hi-Fi should surprise to the upside. I haven't seen the headline numbers yet, but before there was a malaise in the retail stocks, they were considered one of the best market darlings and the best retailers per square foot out there. So I'm expecting a good number, and that's mainly off the charts and the way it's bounced recently.
And Jonathan, more broadly, we have seen weakness in the local market as reporting season has got underway. Is that sort of more coincidence, or perhaps the market just a little reticent at the moment to invest?
I think it's mainly just people are rotating out of CBA. I forget the actual percentage, but if BHP falls, CBA falls. That's pretty much the whole index game right there. CBA is the most expensive bank in the world, and you've seen that there's a bit of rotation out of CBA into ANZ and maybe into NAB and Westpac this week. And I think that's one of the big pressures on the index itself. But just in general, the ASX and this is just from years of following the markets, is that when the ASX tries to break out, there's always someone trying to sell it and hit it back into the range. And I think that's what we're going to see here. So I think it'll be another case of ASX underperformance versus the S&P 500, as that AI trade carries that S&P and Nasdaq a little bit higher. But without the tech exposure and a bit of weakness in CBA, I think we'll probably go sideways to drift a little bit lower in the XJO.